Hi everyone. So today was the first day when I started implementing the strategy of selling covered calls on the SPY ETF in my Roth IRA. So let's see how everything went today. My account got 8 cents dividend, hooray, and I got out of my Google position, my Globant position, and my XBI position. There are a couple, some fractional shares are still left, but in a few days that'll disappear supposedly. Okay, so these were the old positions, and what did I do for the new positions? So first of all, the most important, of course, we bought 100 shares of SPY. That's the S&P 500 tracking ETF. So that's the core of the account, roughly worth 40,000 right now. And then, once I have 100 shares of SPY, I can sell a call. So open a short position for the covered call. So I sold open the 413 call expiring on February 17th. So it expires in 2.5 weeks. So actually very soon. So the price I got, 318, not a great price, but it was all kind of, I needed to do too many trades at the same time, so I really just wanted the execution. And I think once we kind of start going, things will get better with the prices that we can get. Anyhow, so bought SPY, sold the covered call, and with the remaining cash, I bought about half of the money, about 3,500. I bought Starwood, and for another half of the money, I bought Rhythm. And both are rates ETF with with large dividend, but they don't go up as much. So it's more like safe money, just to balance the little bit risky strategy that I am doing. Well, it's actually pretty safe, but anyhow. So these are the trades that I made, and then so the result is this. So the current position as of today, as of closing to today, 100 shares of SPY, 400 shares of Rhythm, 168 shares of Starwood, and the fractional shares of XBI. And the most important thing is we have this short call here, hoping that it will expire worthless, right? So I bought it sold it for 318. So it moved a little bit against me. So right now I'm losing money on the call, but already making some profit on everything else. Everything else I think went up since I entered the position. Anyway, the value of the account right now, 47,600 roughly. Right, so as always, let's look at the account performance. I'm just showing you day by day, but really all I really want to do is track it month by month, or just a couple weeks at a time. Daily, it's not worth it, so I will be deleting those days very quickly. But anyway, at the beginning we had 45,000 in the account, now 47,600, and so the account went up 4.62%, which is not bad. But had I had SPY in the account from the beginning of January, actually my profit would have been 6.29%. So we are starting the year 1.6, 1.7% behind SPY. So not great. Of course, I would prefer if these percentages were higher, but that's the problem is, like, when you exiting a lot of positions and entering new ones, there's always essentially you lose some money. At least I do, and And so that's why I prefer not to trade in and out of positions unless I really had to, unless I really have to. At this time, I did need to get out. So you know, we had to take the hit, and of course, as you can see, we were behind. Actually, the day before, you know, we were behind already by 1.5% to start with. So it got slightly worse because of the trades, but you know, we are still fine. So our goal is to catch up with SPY and actually get ahead. So let's see if we can do it. So what are the plans for next few days? Actually, the plan is to do nothing. Right? This is the beauty of this strategy. I don't want to trade every day. I just want to trade probably, hopefully, just once a month. You know, close the old call position and open new ones, and kind of go from there. So the frequency of the calls of the trades will be relatively low, and we'll see how it goes. There might be some action that I might need to do before expiration, but right now everything looks good. So for tomorrow, February 1st, you know, tomorrow is FOMC meeting. They will decide how much to raise the interest rates, most likely by 0.25%. The markets will probably be happy that it's just 0.25%, so the markets will go up, hopefully not too much. And because we don't want SPY to go up too much. So our goal is for the SPY to stay below 413 so that the call expires worthless. So below 413 on the expiration. Know that I'm not saying to stay below, just to be below. You know, so if this is 413, SPY is somewhere here right now. So it can go up, and as long as it comes down before the expiration day, we are actually good. So anyway, that's the plan. We'll see how it goes. If it goes up too much, then I have to manage the position too, because I don't want to be assigned. And so the only action for me in the next few days, SPY, Starwood, Rhythm all pay dividends, and I want to set up DRIP on those stocks, dividend reinvestment for all three of them. For SPY, actually, you know, if I really want to maximize profits, I think I might be better off putting the DRIP, just don't DRIP SPY, rather put whatever dividend I get, put it back into Starwood or Rhythm. But it'll help me track, you know, SPY better if I reinvest the dividends, or if I let the brokerage firm, which is Fidelity in my case, reinvest the dividend into SPY. So we can then compare, hey, did we actually make some money or not? Okay, so that's it for today. You know, wish me luck, that everything works well, that SPY goes up, but not too much, and wish you all happy trading, and I'll see you on the next update.